Hello, everyone. How you doing? This is Myra J, the coach, and this is Topic Tuesday. We got the finance guy in the building, Mr. Curtis Jones. So this is Topic Tuesday, each and every Tuesday at 11 a.m. Central Time. Make sure y'all tune in on YouTube, Spotify, and Apple Podcasts. So make sure y'all tune in and catch all of the previous shows and the future shows that's coming up as well. So don't miss out on it. So today, we're going to be talking about finance and credit with Mr. Curtis Jones. I've been knowing Curtis for a long time, and his lovely wife and family. Curtis, you're in Houston, Texas, right?
Yes, sir. Right out here by way of Richmond, Texas, of course. Down the street from it, but everything Houston out here.
Everything Houston out there. And I'm located in Dallas, Texas, but we're both from Mississippi. So we got Mississippi boys in the building. So if you are not familiar with Mississippi, you hear this accent, we country, we know it. Hey, it's still the hospitality. So I wanted to bring Mr. Jones on the show to talk about finances and credit because it's so very important, and to also talk about insurance, that type of thing, because we don't talk about that enough, especially in our community or just in general. And so I want to bring him on so we can really get into it, so we can hopefully we can help you guys out with the insurance talk, talking about credit, talking about your finances and which route you can go with your money, because we're all trying to save and we're all trying to figure out, or make sure that we're good when we leave here. Make sure our family is good rather when we leave this earth, because everybody got to go. I'm sorry, it's a conversation that has to be had and it has to be said. So Curtis, man, welcome to the Myra J Show. Thank you so much for joining us with Topic Tuesday. So tell us a little bit about yourself and your company.
All right. Well, of course, just like I said, my name is Curtis Jones, and I am originally from Jackson, Mississippi. Jacktown, stand up. That's how we do it. Of course, getting involved inside of the financial industry. I've been in the financial and insurance industry for about the last 6 years. I started off in straight insurance with a company that we all probably know, of course, with Primerica life insurance. That's what I started off with. Of course, if you don't know anything about Primerica, trust me, you will find somebody that will knock on your door and ask you if you want to make some extra income, and that's Primerica.
Hey man, I agree with you too. You show it.
After I left Primerica, I went and worked for, of course, in the banking industry. I worked with Regions Bank for about 3 years, and of course, I worked for the credit union as well, that's locally back inside of Jackson. And of course, my company, Legacy Builders Financial, basically we're all just designed and just helping the individual family just change the generation, one generation at a time, by teaching people the differences on the importance of insurances, the things about budgeting, the things about saving money, about making money too. Because if your money not making money, then something's not right.
You got the attention on the making money part. I can tell you that now. You got the attention on that one. I'm sorry.
Yes, indeed. So but basically, like I said, the name is Legacy Builders Financial. It's actually, the name is biblical to me, because just like inside of the Bible says that we should leave an inheritance for our children, and of course that's a legacy. So of course I call the company Legacy Builders Financial for that reason, because we're trying to help people leave a legacy and leave an inheritance for their children, for their children's children, and their grandkids and great grandkids, or for whatever you say. So that's Legacy Builders in the whole right there.
Okay, so you got 6 years of experience. What got you into like this whole insurance deal and this credit and finance? Like, what clicked in your mind and say, hey, this is what I want to do?
Absolutely. Okay. Well, to be honest with you, I'm a person that likes a challenge, first off. And I heard a rumor that was floating around about a particular institution about how they did not like to lend money inside of a certain area, right?
Okay.
So of course I love a challenge, and you know what? I'm always for my people. So of course I went and started working for that company, and lo and behold, of course, I was able to lend a massive amount of money inside of a poverty-stricken area. And not only doing that, I was able to help teach the elementary school kids about saving. I was able to help people learn how to pay off debt and everything like that while working inside of the bank itself. I did so good inside of the bank to where they wanted to actually ask me, how did I actually make it possible to actually lend that much money inside of a poverty-stricken area? One thing I'm strong on our people. When I say our people, I'm strong on the little guys. Sometimes we get stepped on. We don't know things about how to take out a loan. We don't know things about having a credit score above 400. The only thing that we were taught was save your money under the mattress or inside the ice box, and then buy everything in cash. You know, that's the wrong mentality to have right there. So I got a heart for our people, and I really wanted to actually learn the banking industry, not from the school, but inside the bank. So basically, I got into the system to learn the system so I could teach our people the system.
So you saw a need there and you just jumped on it. So you educated yourself for, like you said, the smaller people, so they can better know what they need to do when it comes to saving money, getting loans, getting your credit together, getting insurance, and just all of and making money, like you said earlier, making money as well, because a lot of people don't know, and you got people out there that they don't want to look it up. They don't want to Google. They don't want to YouTube. They just want someone to just give it to them straight, sit down and talk to them, give it to them straight. And not only that, but be honest with them and be genuine with the information that you giving them, because you got a lot of people out there that's just trying to get money out of people instead of actually genuinely caring about financial growth, financial stability, and generational wealth, leaving a legacy behind, just like you talked about. And I hear a lot of people talk about that as well. And I'm gonna be honest with you, it was probably until like this year, last year, when I started to hear people putting their kids on their credit cards, making them authorized user on the credit card. So when they get to a certain age, their credit can be good. And I thought that was like, man, that's pretty dope. So about like the last few years, man, I'm almost 40. This is my favorite. I'm almost 40 years old. So, and man, and I just started to hear that, because we don't hear it a lot, because we don't really think about it. Like, I had other ideas for financial wealth, and leave my daughter something, you know what I'm saying? But to like the credit card, they're like probably like the one that's easiest thing you can do. So what's your take on that part of it?
Okay, honestly, man, when it comes down to credit, man, I think that we found a couple of loopholes that actually help advance people, even when you don't even have credit established. Definitely when it comes down to that credit portion, that is like where we do not have any knowledge at all. Once we get it, once we go out there and go buy that first laptop on credit, or we go out there and go buy that new car on credit, because in the military, that's how they got us. They got us with those laptops, So
and cars and stuff.
So that's how they had got us and everything. So we mess up our credit. We get credit at 18. We mess it up by the time we turn 20. And we don't even know how to recover from that right there. So with the credit cards, that's actually something that I actually teach. One thing I don't call myself a credit repair specialist or anything, but I do coach you through establishing your credit, basically. By reestablishing your credit. I'm the type of person that, first thing about building your credit is about taking ownership.
Definitely.
We all had a bad time when it comes down to credit. We all missed payments. We've all maybe had a repossession. Some of us had a foreclosure. Some of us had to file bankruptcy. But we're taught as a people also dealing with credit that it's embarrassed for me to go tell somebody I had a foreclosure or I had a repossession. Or Lord and behold, don't you never tell nobody you filed bankruptcy. Oh no, don't tell nobody you did that.
It's a negative thing.
But when you was talking about with the credit card, that's actually called it's a term called piggybacking. And what piggybacking is basically that where I'm going to ride your credit card. I don't need a credit card now. I just want to ride your credit card so that I can establish my credit. And usually one of the fastest ways in order for somebody to increase their credit score is not by disputing an item on your credit report. I hate when people talk about some dispute this, dispute that. No, the easiest way for you to get your credit score to jump and to show you some improvements is to get you something called available credit. If you don't have any available credit, your score will not go up. If you don't have any revolving credit, your score will not grow. So by you piggybacking off of someone else's credit card, that right there gives you a credit card on your credit file that you've never used, but they may have had it for 20 years, and it shows up for 20 years of payment history on your side for showing a good credit card and good revolving credit. So that's one of the easy ways for you to get your score to jump up if no one has ever told anybody that.
Now, is it a certain age limit that someone can piggyback off that card, or to get on that credit card, to be an authorized user, brother?
Well, to be an authorized user on some cards, you can be as low as the age of 16 with some cards. It just depends on what your credit card company allows. And, just like you said, you want to put your children on it as soon as possible. And people gonna laugh about this, but you remember when people said, oh, my mama got my cable bill in my name.
Utility bill, everything.
Well, this time mama can put your name on a credit card when you're 16 or 17 years old, and by the time you turn 18, it looked like you done had 20 years of credit history. And, and the credit bureau don't look at it as if like where you're only 18 years old. No, they look at that credit card and they look at that payment history for that credit card.
So, and I'll actually, that could work for kids growing up if it's taken care of correctly, right?
Absolutely. You want to make sure that you're riding on the right car. Now, to get on the right train, because you don't go in the wrong direction.
Yeah. So, and people don't understand how important credit really is, and especially like when it comes to like getting a house, when it comes to getting a new vehicle. And I know your wife is a realtor, and I'm just thinking about this, man. I really should have had both of y'all on the show at the same time, because this would have been so great, because I can talk to both of y'all about both of these things. I know you know a lot about it, but never mind. We'll get it next time. I get both of y'all there. We gonna take. I'm just sitting here thinking like, man, wife is a realtor. I could have got both. So y'all together is like a powerhouse type deal. Now that I'm thinking about it, because y'all can help each other and help other people on how to get a house, credit, finances, how to get the credit score up, the whole insurance deal. So that really works for you guys, and for yourself. So what personal experience, because I know a lot of people want us to be transparent, what personal experience did you have with credit and insurance?
Oh my God. Okay. Well, I'm gonna start with the insurance side first.
Okay.
One thing about the insurance is that a lot of people never understood, especially inside of our community. It's like we've always been used to seeing the guy come knock on the door, show grandmama that card, and then grandmama give him money, and then we find out grandmama don't have life insurance, or she don't have anything, but she been paying this man all that premium. So we learned not to trust the insurance man. So, but my thing is with insurance, one of my biggest stories I've always told my clients is one time, because I'm licensed in Louisiana, Mississippi, and Texas.
Okay.
So one time I had a policy with an individual down in Louisiana. He was making about like around $500,000 a year. Okay. So very wealthy. House was pretty good looking and everything. They were not living above their means, but they didn't have any life insurance. And the husband was always telling the wife, like, baby, we don't need no life insurance. I got it on the job. I make $500,000 a year. We got plenty of money inside of the savings account. We don't need any type of life insurance, right? So I'm sitting down there talking to him, and I had told him, I said, sir, with the income that you have, we need to put you on at least like between a $2 to $3 million policy easily, in order for it to make sure that all of the needs are taken care of if you were in any way passed, because his wife was a housewife. Okay. So to make a long story short, the man, they went on and did the application with me. I spent about like 2 or 3 hours down there. Thank God it was only in Monroe. It wasn't that far from where I had to stay, get back home. But after spending 2 or 3 hours talking with him, I finally got this guy to go ahead and do this policy. So they go through, they do all the medical screenings that they have to do to get themselves approved for this amount of money. And lo and behold, the policy got approved on a Monday. I was calling them on a Tuesday afternoon about 12 o'clock, only for the wife to be calling me around the same time and leaving me a voicemail telling me that her husband had died.
Oh, wow.
So I was calling the wife, telling her that they were approved, and she was calling me to let me know that he had already had transition and everything, just out the blue, a healthy guy, just out the blue. But lo and behold, I was able to take him a $3 million check down to his wife. So that income was replaced, and that's why the importance of insurance is very important. I take that stuff dear to heart. Even when my father passed, my mother was able to sustain her lifestyle off of the life insurance policy we put on my father. So I take life insurance if you can't sit up here and talk to me if you got people putting insurance on rims, on cell phones,
everything.
On cars, everything. You even got insurance on your teeth sometimes.
Yeah.
But you fail to put insurance on your life. That's one of the most unselfish gifts that anybody could ever give is the gift of life insurance. It's a topic we don't want to talk about, but it's a topic that's definitely needed.
Man, you hit the nail on the head with that one. Even though you might have the income to cover your expenses or whatever the situation may be, you don't really have to use that income that you got saved up if you go ahead and get life insurance and go ahead on and pay into it. And I'm glad you brought that up, because it's like, and I'm not trying to count anybody's pockets, but life insurance has become very cheap lately.
Right.
If you can even if it's just something or enough to bury you, that's better than nothing at all. And instead of leaving this earth and having other people Not that you'll know a care because you'll be dead and gone, but instead of leaving this earth and having someone having to scrape money up and getting GoFundMe accounts and all this other crazy stuff just to bury you or to cremate you or whatever the situation may be. Like, get life insurance, y'all. Like, I don't understand like how easy that is. You may have it with your job, but get your own personal one. You know what I'm saying?
Right.
You can get as much as you want to get for the most part, if I'm not mistaken. And as long as you're making the payments on it every month. And I'm talking about these payments be anywhere between, because I'm with Proud America too, by the way. I'm with got the life insurance with them as well. So these payments can be like anywhere between $20 to $50. It's just a month. It just all depends on what you choose, how much you want to take out for yourself. So, and then we'll get back to credit shortly, because I know this way more important. Well, both of them equally important, but we'll get back to credit shortly. So why is it, to go along with your story about your client and your father, why is it so important to have life insurance?
Well, I mean, easy with me, I just want to say that's the easiest way for a broke person to make the next generation rich. You know, if I have to sum up all of this in one sentence, that's the easiest way for a broke person to make the next generation rich. Is right there. Is because by starting them off on the better foot. And, you know, of course, we always say the thing about, well, nobody left me nothing, so I ain't gonna leave them nothing. Yeah. You know, it's all about that mindset. We got to get out of that selfish mindset.
Yeah.
So it's important because it allows your children to go to college. You work hard day and night, saving money, you know, getting a good job, getting them through school so they can go to college, right? Why should that change just because you leave this earth? I don't want to say prematurely, because we all know for a fact that God has his own ordained time at the end of the day. You know, no man knows the hour and when we're gonna be leaving here. So we all have our ordained time. So whenever God calls you home, why should the goals you have for your family stop because you left? You know, insurance, if you have the proper type of life insurance. Now, we did talk about it, like with Proud America has term life insurance. And usually if you turn 18, get you a term policy, because it's gonna be way cheap. You can get you $200,000 worth of life insurance at the age of 18, depending on what your health condition is, of course, for as low as about $22 a month. Yeah. For as low as that, you know, and you're getting $200,000 that you're able to leave to somebody. Well, Curtis, I might not have any kids. That's fine and dandy. Do you have nieces and nephews? You remember TT's baby? Yeah.
Might still have your parents here or whomever. You know, either way, it's still no reason not to get it at the end of the day, because like I said, you have to be buried and they need to have the money and finances to do so, instead of putting that burden on the next person. You won't want to have you in the funeral home for a whole month and you know, waiting on mom and dad or whomever to get the money together just to bury you. And so, and again, if y'all didn't hear what he's just said, the sooner the better. The earliest the better. If it's 18 years old, 19, 21, those are good time frames as well. And we have to stop thinking that just because we're a certain age and we're healthy, that nothing's going to happen. You don't know what you're going to do from one day to the next. You know what I'm saying? You don't know if you're going to wake up at the end of the day. You know, when you go to bed, when you walk outside that door and go to work, run your errands, go out to eat with your friends or whatever, you don't know if you're going to make it home or not. You don't know if you're going to make it to your destination or not. You just don't know. That's just life. Like Curtis said, nobody knows the day or time nor the hour. So we have to be careful. We have to protect ourselves and our families and make sure that everybody's good. And I'm telling you, like you said too, that's creating generational wealth. You hear me? Like, that's where it starts at, generational wealth. And that's some things that I wanted to do for my daughter, is create some things where when I'm gone, she'll have something for herself. Right. You know, so she won't have to work as hard. And she's gonna have to work now. There you go. Yeah. That life insurance ain't gonna hold you for life. You're gonna have to work. I can only hope that she invests in it to keep it going. Absolutely. You know, then pass it down to, you know, her kids and you know, but that's how you create generational wealth. That's how a lot of people create generational wealth. Well, that's one of the ways, wasn't put that way. Absolutely. So what types of insurance, I'm trying to get my notes here. What types of insurance are beneficial to you, like to people that's listening? What type of insurance are beneficial to them? Okay, now, first off, you know, we're going to definitely stick with on the life side, because you got your life insurance. You know, you got term policies, which are only good for a certain amount of time. So they usually can go from like 10, 15, 20, 30. I think some companies even have 40-year terms right now. Okay. You know, but it's only good for that term. Now, then you also have your whole life policies, which are going to be good, of course, for your whole life. All right. Now, usually when you're younger,
or whatnot, you usually get you a term policy because you're building up through those ages. You know, you're out there working, you're out there making a lot of income, you're out there building things like houses, you're getting cars, you're getting married, you're having children. So you're going to need a bigger amount of insurance to cover you in the event that something happens, right? And then, of course, you have the elderly individuals that have not had the opportunity to get insurance. They usually will try to get them a little whole life policy for it to go ahead on and pay just for the final expenses, right? Okay. Now, with a lot of people preach against whole life insurance. Whole life insurance is not bad if it's used properly. There are ways, and I told you that I was going to tell you, there are ways that you can actually use insurance to fund things while living. See, a lot of people don't know that.
Yep. And hey man, that's something else I just learned a few years back. That, but go ahead, I'm gonna let you tell your story. But you ain't lying. You know, you were lying. Not saying you were lying anyway. But that's why we got you on the show, because people need to know these kind of things. But I heard that too. But because I'm learning, I'm listening to you. I'm learning as well. I'm taking notes, right. Mental notes. I'm gonna go back and listen to the show myself, so I can go back and get some of these notes, man, and these gems that you dropping. But go ahead and explain that portion, because I think that's very important also.
Okay. So now look, so a lot of my guys that's probably watching this gonna be like, Curtis, man, why did you say that? Well, it's like this. I'm a fair man all the way around. You know, term policy, yes. Make sure you get your term policy, regardless. You know, now a term policy does not build cash value. So you will not get any type of money out of it unless you have a return of premium rider. And that means that basically the premium you put into the plan, at the end of the plan, the company will pay you that premium back. That's the only time you will get your money back if you have a term policy, okay? Now, a whole life policy actually has cash value built inside of it the longer you pay for it, right? Okay. But watch this little trick of the trade right here. I don't recommend that me and you at our ages, I don't recommend that we go get a whole life policy on ourselves, because we're not gonna be able to get enough insurance that's gonna be able to cover us for what we need to do at the price we want, okay? So for a $500,000 term policy, you might end up paying $45, $50 for it. On a whole life side, you might end up paying $125, $130. So it's not going to be financially smart for you to get a whole life policy for that amount. But watch this trick of the trade right here, okay? And like I said, my guy, some people are gonna be upset with me when I say this, but trust me, I've been in rooms with closed door conversations, and this is how they do it, okay?
I just figure y'all the secrets, man. Y'all been listening.
Okay, so I have a newborn baby, right? Okay. Now, if I wanted to, I can go and get a whole life policy on my newborn baby, right? Okay. I will only spend about $20 to maybe $25, and I can get one for about like $25 to maybe $50,000, right? Mm-hmm. Now, I also get an option on that whole life policy by saying I want to pay it up in full by 18 years, right? That's going to make my premium go up a little bit, but watch this trick of the trade. When my daughter turns 18 years old, I can surrender that whole life policy and get all of the cash value out of my policy because I paid the policy up in full by the time she turned 18 years old. So now I have a whole life policy on my daughter that's $25,000, maybe $50,000. And now when I turn in and I surrender that policy, they're going to give me my cash. And now my daughter can use that money to go toward her college education. She can use it maybe if we want to buy her a graduation card if she gets a scholarship or something. But I just gave my daughter a $25,000 to $50,000 head start in life just for $35 to $40 a month.
Just that easy.
Just that easy.
There y'all go. Hey, that's why we got him on the show, because so you drop these gems. That's how you make your money. Is how you get this head start. And college is expensive. I can only imagine how much college is going to cost when these kids get up there in the next 10 years or so, man. It's going to be like ridiculous. A lot of people are still in debt to this day.
Absolutely.
So
deferring.
That's it. Forbearance, repayment plans, options. That's me, but whatever. Yep. We're gonna get it out the way one day. So, what other ways insurance can be used to build wealth?
Okay. Also, you can also use your short-term disability insurances, of course, your critical illness insurances as well. Those are other type of insurances you can use to actually to keep your income coming into your house. One of my stories about a critical illness policy that I had wrote, it was, I think the policy was about $15,000 of face value.
Okay.
And this guy was about, I think he was like 60 years old. So he was only paying like around like $60 or something like that, right? Mm-hmm. Now, what critical illnesses and what heart attack, stroke, and cancer policies cover, they cover you in the event that you have a heart attack, stroke, or cancer, right? So this individual was healthy at the time, but when we did the policy on him, he went to the doctor like 3 months later. The doctor had said, you know what, you have cancer. So the doctor diagnosed him with cancer. He sent me the paperwork. I sent it into the company. The company wrote him a check for $15,000 because he came down, because the doctor said he came down with cancer, right?
Okay.
But we know as believers that that's not the final say so.
Right.
So him and his church went into prayer. They laid hands on him, anointed him with oil. 3 months after I gave him a check for $15,000, he went back to the doctor, and the doctor told him he didn't have a trace of cancer.
Wow.
So now he didn't even have to pay back that $15,000, and he was still able to get another cancer policy because the doctor said he didn't have cancer.
So now the policy, everything changes now, documentation wise, the amount of it, because now he can go and get that another policy due to cancer.
Right.
Because if you got an illness already, how does that work again? Like if you got an illness already, is they give you like only so much or something, or you can't get it? Like, how does that work?
Well, when it comes down on life insurance side, depending on what type of illness it is, they will rate you a different rate. So yeah, so your premium may be higher. Like some people say, well, I got high blood pressure, I got diabetes. That does not matter, because usually when you have high blood pressure and diabetes, as long as it's not one of those outrageous numbers or whatnot, like I know at times before, people were on the pill for diabetes. They were on the pill, and I was getting them approved for the ratings of just a normal policy. You know, people was on high blood pressure pills. They get approved for original ratings. You know, so it just depends on what the illness is on how they rate you, and then and how they're going to cover you.
So is it safe to say that, and like we talked about earlier, if you know you got a certain illness in your family and it runs generational type deal, is it okay for someone to go ahead and get, let's just say, insurance for cancer? Well, let me ask you this first. Is like an illness, is there like a total separate type insurance, or just everything is still, I know when you file for insurance, they're gonna ask you all kind of questions, right, about your health and everything. So is it like, do they have like a certain insurance just for illnesses like cancer and you know, that type of deal? And then do they got one just for like a regular one? How does that part work?
Absolutely, yes. They have the critical illness policies, which are going to be your cancer, your stroke, and your heart attack policies.
Okay.
You have your short-term disability type policies, like if you get hurt on the job, you're gonna still get your check. You have your long-term disability type of ones, it's the same as the short-term. And then, of course, you have things like hospital indemnity plans, to where if you end up being inside of the hospital, that they'll pay you like $300 a day if you're in the hospital. And then, of course, you have a policy called an act. Now, this is one that a lot of people think that they have insurance, but they don't really have it. It's called an accidental and dismemberment policy. So if you ever hear anybody say they have $1 million policy and they only paying like $10 a month or $15 a month, they don't have life insurance. They just have an accidental policy. And the way how that policy works there is that you have to die in an accident in order for it to pay that $1 million. Oh. So, and you have 90 days usually. So within 90 days, you have to die if you have an accident. And let's say, for instance, that the hospital releases you on day 3, and they say you're good to go, and you die on day 5, that policy still doesn't pay out because the hospital released you. So you have to be very careful when you're getting your insurance, making sure you're sitting down with a skilled, licensed individual who's going to actually tell you exactly what it is, not trying to fatten their pocket, but trying to make sure that you're taken care of. So the accidental and dismemberment policy also is that policy you ever heard of. If somebody loses a limb, they get paid for it. Like if your finger comes up missing, they'll pay you a certain amount of money for that right there. But who wants to be gambling like that? I don't want to waste my money gambling like that. If I'm gonna do that, I'm gonna go to the casino.
I know. Let me back up a little bit, because something really just dawned on me when we talk about insurance. So the client that you brought a couple $1 million check to, you stated that they just got approved. So they really give out money just that fast, even though they haven't made a payment on it yet? Or I know you got to pay something in the beginning though, correct? Like some kind of like a, I don't know if you call it down payment or not, but you tell me the term of it.
Yeah, okay, yeah. So usually when you get your insurance, and that's another reason why it's important to understand what insurance company that you're going with. Not trying to plug anything with Primerica because I've been away from Primerica for about 4 years now. But I love Primerica for this fact. Primerica is one of the only insurance companies that it takes an act of God for them not to pay out a policy. During 9/11, they paid out the most death claims during 9/11. And we already know that was a catastrophic loss, but they still were paying claims out. They pay claims out regardless of whatever the situation is. I've even seen Primerica pay out claims when somebody lied on an application and they still paid the claim out because they do what's right for the people. So that's not plugging them, but that's just saying the caliber of a company they are. But so you have to make sure you're paying attention to what type of company you are because they have those type of clauses, like it's called a contestability clause. Okay, so usually you pay your premium, which was what you were talking about was the down payment. So you pay your first month's premium. Okay, once you get approved and your plan is active, that means that if he gets approved at 12 o'clock, they're gonna pay you out at 1 o'clock. As long as they don't have a contestability clause to where they say if you pass away within the first 2 years, they only will pay your premium back.
Okay, so you really got to pay attention to what you're signing, like you said earlier. Pay attention to what you're signing. Make sure you read over everything. Make sure everything is sounding good and making sense. And also, and this is from a business standpoint for me. When you're handling business such as this, you don't have to always give people the answer right then. Give yourself 24 to 48 hours to get back with people. Granted, and we pray and hope nothing happens to you in that 24 to 48 hours, but you just got to be careful and go ahead and just closing the deal right then. Sometimes you don't always close the deal right then. Give yourself a little time to read over because sometimes so much information could be coming at you. You don't know what you're doing.
Absolutely.
Your whole mind can get clogged up or whatever because so much information is coming down on you. So, Curtis, you got anything else on the insurance? Anything else you want to share on the insurance part of it?
Only thing that I want to say about insurance, like if you don't have it, go get it. You know what I'm saying? You're gonna live with insurance, but you'd rather not die without it, because your family is gonna suffer the most. You don't want to have your family selling fish plates and t-shirts just to go and bury you at the end of the day. I just gotta be 100 with it.
Hey, that's what a lot of people do. GoFundMe accounts, and by no means that we're trying to down anybody, trying to count anybody's pockets or anything. We're just here to educate and to uplift, getting life insurance and how important it is to make sure that your family is taken care of, let alone yourself. All right. So let's jump back to credit real quick. So why is it so important to have a good credit? So why it's so important to make sure and what's a good credit score for you to have? That's the second question. But why is it so important to have good credit?
Okay, all right. That's a real good question right there. Well, first off, you want to have good credit because your name. You want to be able to buy things with your name versus what you have in your pocket. Because those 3 digits that you have for a credit score will make you be able to get a whole lot more money than what you have inside of your pocket current, right? So a lot of people will say, well, Curtis, if I got $100,000 in the bank, I don't need credit. Wrong, because if you got $100,000 inside of the bank, you can go and borrow another $300,000. Now you got $400,000 in the bank. I mean, I'm all about mathematics. 1 + 1 = 2. If I go get more money and bring it in and put it into my savings account, that gives me more money at the end of the day. So your credit score allows you to have money conversations that your pocket won't allow you to. So it's very important to make sure that's on top of that. That's on point right there. And a good credit score, of course, to have, that just depends. It depends on what you're trying to do. Are you trying to get a house? Are you trying to get a car? Because those credit scores are a lot different. And I know we probably ain't got enough time to talk about it on this show, but I can also break down to what are the requirements for some of the credit unions and some of your banks, because everyone has a certain tier on where they give you the loan at and what interest rate you're going to pay at. So all banks and credit unions have those right there. That's why it's important to have a credit score. I would say of about a 620 to a 640, you're in a good area, because you can get you a house off with that credit score at a good interest rate, and you can go get you a car with that credit score at a good interest rate as well. So I would say about a 620 or 640. Now, would we all love to have 800s? Of course, we would love to have 800. But at the end of the day, if you're at a 620 or 640, you get to go.
So what's the difference or how better it is rather, or difference to have a 620 or a 750? Like how better are the opportunities? Like talk about that a little bit.
Okay. All right. So now 750s, of course, those American Express conversations, they know for a fact that you're gonna pay that credit card off at the beginning of the month because your score reflects that's what you're gonna do. So, and we know American Express is accepted everywhere, So now the difference between the 620 and the 750 is gonna be like, it depends on what the tiers are for your bank. Like some credit unions have a tier of 620 to like 650, you'll get a certain interest rate. And the other one will be, of course, a 651 on up to like a 700, and you'll get a different credit score. So the higher your score is, the lower your interest rate is going to be, which is going to make sure it's going to make your payment a lot lower as well. And it can also control the term that you're going to pay it back. So if somebody down here with a 620, they may only give them 3 years to pay it back, but they may give you 7 because you have a bigger credit score. And it makes your payment a lot lower. So yeah, it just depends on what your interest rate is going to be, the amount of time you're going to actually be able to pay the loan back as well, and if you need a cosign.
So if people have time, especially if you're trying to get we're gonna say a house for right now, but most people need like 620, 640. So if you want to get a house and you're trying to shoot for that score, if you got time, it's best, and if at all possible, shoot for the 700s to make it easier, a little bit better for you when it comes to like the interest rate and how much you can get, that type of deal. And so, absolutely. Yeah, and that's something that I've learned as well, because I had a house back in 2014 and went through some little trying times, some struggles just getting to the house. And so I've learned a lot from that, and that's one thing that I did. Another thing I learned, and you can talk on this too, is the debt to income ratio when it comes to getting a house. Right. And I hear it all the time, and I also see it sometimes too. Please don't go out there and get a new car if you're trying to buy a house in the next year at least, or so. Please don't go out there and get a new car. Unless you just ask Kurt to tell you, unless you just absolutely need it, there's no way around it. You just absolutely need it. Don't go and get a new car. If you can, whatever you have, ride it out. Like my dad used to tell me, if ain't nothing wrong with it, keep driving. No need to go get into no debt or getting another note if you don't really need to or really have to. Absolutely. And so why is that so important, Curtis?
Look, hey, that DTI, those 3 letters right there will crush everybody's dreams. We've seen people, man, literally that are about to get ready to go to the closing table at their house, and they go and do something like going to go get a vehicle right before they close. You are almost at the promised land, and you go and do something. And of course, the first thing you say, well, I needed it. Did you really need it, or did you want it? There's a difference between wants and needs. Right now, you needed this house, but you wanted that car. So now you're going to enjoy the luxury of your car while driving by the house you could have bought, because your DTI was messed up. And it's crazy because it only takes that amount of debt. It's not even the amount of debt that goes on your credit report, it's the payment. So you just took yourself from having a $200 car note to having a $500 car note, which added $300 to your debt to income. So then you got to take an account of your house. So it's very important, just like you said, if you are in the market of getting a house right now, even if your credit score is not where you want it to be, and you're going to say, well, I want to wait till next year to go and get my house. If you do not need to get a vehicle, do not buy a vehicle. Don't even go buy furniture in your name if you're about to get ready to buy a house. Keep your credit as clean as possible, because I'm going to give you all another secret real quick. Because once you close on your house, then you can run and go get your car. Right. Then you can run and go get the furniture, and you'll get approved for it just like that. They'll be throwing money at you like popcorn, even though you just bought a house because you did it the right way. You see? So there's always a right way and a wrong way to do it. So don't always act off of your impulse. You got to relax, be patient, and then get your house first. So that debt to income, that right there, that kills a whole lot of dreams.
Man, I've seen it happen. I've seen realtors get mad and frustrated when people sit up here and go and they sit up there and go get these cars because they get excited. You know what I'm saying? They're like, yeah, I'm finna really do it. I'm finna pop out with a house and a car at the same time. Like, I'm finna really get it. And then they don't end up getting it. You know, and then I'm 100% sure the creditors and or the realtor let people know, hey, don't go get nothing new. Right. Don't go get no new credit card. Don't go get no buy no new furniture on credit. Don't go and get no new car, because all that stuff, it will really kind of get you. You know what I'm saying? Right. You really got to be making a good, decent amount of money for all this stuff not to kind of get you.
Absolutely.
So let me ask you this real quick before we go. What if a person has a car already? A car note and trying to get a house? Like, how would that affect them? Does the amount of money that they want goes down? Like, and I understand it does depend on everybody's salaries and their income. So how does that work?
Okay, you're talking about in reference to getting a house?
Yeah, reference to get a house. Yeah.
Okay, gotcha. Okay, so when it comes to, so if you already have a car note that's already high, then yeah, you may need to wait a little bit, maybe for like, let's say now we're going to wait till next year. And the reason why we're going to wait for next year is because of this. Your credit score may be like a 680, a 700. That's good. So this is the way how you get away from that $500 credit score. I mean, that $500 car payment. Go ahead on and refinance your car. Okay. It's going to refinance it for about 5 years. And I know you're saying like, well, I don't want to add those years to my car. No, go ahead on and refinance it, because why? If you add more years, to it, it makes sure your payment go down lower. Okay. So which makes your DTI go down as well. Remember, they're not worried about the amount of loans you've taken out. They just want to know about that dollar. Can you repay me if you take this out? So if you just drop your car note from $500 all the way down to $300, that means you got what, $200 extra you can spend on a house. So therefore now you're going to be able to go ahead on and go get that house at the mortgage rate that you were looking for, as long as your income is the right amount. Now, you can't be out there trying to buy a $500,000 house and you only make $24,000 a year. That's not going to happen. You know,
math ain't mathing on that.
Yeah, I know faith without works is dead, but that's a lot. Yeah. That's going to take a lot of faith right there. You know, but you're not so when you're shopping for a home, also make sure that you're shopping for a home within your means. I didn't start off with a 5-bedroom, 4-bathroom house. Me and my wife, we started off within a little townhouse. Then we went and got us a starter home with 3 bedrooms, 2 baths. And then after that, we was able to actually go buy us a bigger home. You know, we was able to buy that 3,000 square foot house. You know, and then so now we were able to sell the house, get rid of the house, and then we were able to move up because we took the proper steps. We showed them that we could handle it with a little bit. Then when they gave us a lot more, we was able to keep on moving forward with it. And I already told my wife, I said, listen, we ain't moving no more. If we moving, we paying somebody, and if we get a house, it's not gonna have upstairs and downstairs. I'm gonna tell you that right now. Because I'm tired of taking stuff upstairs and downstairs, bro.
Hey, that's a workout by itself. You ain't have to go to the gym. Hey, she'll be watching this show now. You better be careful now. You better watch it now.
Look, shout out to Jamila Jones, realtor. You know what I'm saying? Close your home with Jamila Jones.
That's it. Hey, don't plug that in. I see what you did there. So we talked about getting the credit with the whole house deal and the vehicles. The main thing I think a lot of people want to know, how can they get their credit up? Like, how can they get their credit score from the 400s, 500 to that 640 or that 700? What steps to take, step by step, however you want to do it, for people to get that credit score up and running?
Okay, absolutely. Okay, well, step one is going to be one of the most hardest things ever. Step one is you have to be patient. You know, it took you a long time to mess your credit up. It's going to take a little bit of time for you to rebuild it. You know, some of the things that I have, some of my clients that I have them put in place, then I usually see people have their credit score growing about every 90 days. It's jumping about 15 good points easily. You know, so if you have that 580, which I'm gonna raise my hand, I was one of those when I got my house.
Yeah, man.
Know, we had the money. My wife's credit was good, but old Curtis Jones' credit was bum. You know, I had a 580. So what did I do? I put in the practices that I needed to put in place, i.e., like we talked about earlier, by piggybacking. I rolled on my brother's credit card for about like 6 months, and that made my score jump from a 580 all the way up to a 640. So I was able, and that happened within about 60 days. I never disputed anything. The only thing I did was I made sure I started paying everything on time, and I put in practice the right credit formula. There's a credit formula that you need to use to get your credit score to go up. And that's what I do when I sit down with my clients. I actually see exactly where we need to work and where we need to focus more of our energy on. So step one, of course, will be patient. Okay. Step two would be you have to change your mindset. You know, you have to change your mindset. If you're trying to get your credit score to grow, you can't be out there just spending money on every little thing. If there's a new pair of Jordans coming out, guess what? They'll still be out 3 months down the line. You just get them at a cheap price. You know, so because I can take that $200 that you're going to spend on those Jordans, and I can tell you, hey, listen, pay this right here off. Put some money right here. Go get an unsecured loan. Go get a secured credit card and put that $200 towards your credit card so it can look good on your credit file. You see? So you have to change your mindset on things that you need and on things that you want. Okay. And of course, the third one is going to be disciplined. Just be disciplined with your money when you see your score, because when you see your score start going up, you're going to get happy and then you're going to want to go get you something. So you have to be disciplined. So the first one will be stay patient. The second one will be, I say, change your mindset. And then of course, that third one is going to be, you have to be disciplined. Without any of those three right there, you're never going to have your credit score to grow. And that's why I don't like writing dispute letters for clients. So I'm telling you guys this right now. If you contact me about, Curtis, can you write this dispute letter? I will not write a dispute letter. I'm sorry. I don't believe in that. I don't believe in that technique at all, because the techniques I've placed in order for myself and for my clients have shown growth. And that's what we stick with, you know?
So go into that a little bit. Go into why you don't do the whole dispute thing. I know a lot of people do it, but why you don't do it? Go into that a little bit so people can know exactly how that works.
Okay. All right. So like I told you, with me, with the finance industry, I got into the business to help our people, not take advantage of our people. And honestly, sometimes you have a lot of people out there that do this credit repair stuff, that they're kind of taking advantage of people because they're charging them $150 a month just for them to write dispute letters, right? So now watch this, okay? Now, just walk with me for a minute. You ready?
Let's go.
Okay, all right. So let's say, for instance, you have a credit card on your credit file that's over the balance, right?
Okay.
And you owe $500 on this credit card, okay? You come to me and say, Curtis, I want you to do the dispute letters and everything for me. And I say, I'm going to charge you $150 a month so I can write these letters. Here's where I say it's taking advantage of people. It takes 30 days for the credit bureau to get back to you about if they're going to take it off your credit report, right?
Right.
So now that means I got you for $150 for the first month. Cha-ching. Okay. Now we got the second month coming around. It's time for that payment again. I got you for another $150, and I say to you, oh, Myron, you know what? They said that it was yours, but guess what? I'm gonna write another letter. Let me write this other letter, and I send it in to them again. And next thing you know, I got you for $300 already. But guess what? I got another 30 days. So what you got to do? Pay me that $150 right back again. Now, within that 3-month time period, you've paid me the exact amount of money that you could have had paid on your credit card, which would have reduced your revolving credit, which would have showed that you had more available credit, which would have made your credit score go up. Why? Because you're showing that you're disciplined with your credit, because you just reduced your credit card under the 30% mark. Now your score goes up. But when you dispute companies and they keep on contesting and saying that it is you, they just reopen their file up on you.
Yeah. Yeah. Once they find out what you're trying to do, they're gonna open it.
So that's why I don't like now don't get me wrong now. Look, if you want to pay me $150 a month just to write letters for you, by all means, I will do it. But I'm gonna tell you, I don't believe in it. When I can show you how to put that money elsewhere and it will make your score go up. Now, the only ones I will write a letter for will only be medical bills, because of course we know medical bills is a difference on those right there.
Yeah.
Yeah.
Man, Curtis, I really appreciate you, man. You up here giving us all this information like you've been doing this for 6 years or something. Like you know what you're talking about or something. Like you got your own business or something. Like, you know.
Man.
I really appreciate the information, man. It's very informative to everybody, especially me. I'm asking questions. I'm kind of slick asking questions for myself. You know what I'm saying? So that's how I'm so easy and so good at coming up with some of these questions. I'm like, man, I want to know, you know, this kind of stuff too.
Yeah.
But you're saying a lot of stuff that I already know or knew, but you're definitely confirming it. for me, and you definitely confirmed it for the listeners as well. And so before we go, man, let everybody know how can they, reach you, how can they contact you if they have more questions, they need a consultation. Now let me tell y'all now, this ain't free now. It's free for right now. We're giving y'all these free jewels right now, these free gems right now. But people got, this is man business. So you can still, hey, so we want to know how can we reach you, man, and to talk about the insurance, to talk about credit, that type of thing. How can you be reached?
All right, absolutely. You can always email me at Jones.consulting@outlook.com. That's my email once again, Jones.consulting@outlook.com. You can always look me up on Facebook, Curtis Jones. That's my name. You'll see my big, pretty, bright white smile I got on the page. That's me. Or you can go to my business page, Legacy Builders Financial. That's on Facebook as well, and you can inbox me or send me a message on my page. That way it's there as well. And if you do need to have my number, just email me and I'll send you my number over as well.
And I also will, if you're watching from YouTube or Spotify or wherever you may be watching it, I'll make sure I put all of his information in the description so you all can have it. Mr. Curtis Jones, man, I appreciate you so much for just being on the show, man, and sharing so much positive and great information. I know we can go on and on and on about this. We might have to do a part 2, man, like for real. We might have to do a part 2 on this one at some point. I'm about to get you on Freestyle Friday so we can like finish up.
Let's talk about it.
So this is like some very, very, very good information, man. I think everybody needs to know this. I don't care what race or color or creed or whatever you are. Everybody know this information. Everybody, every generation and whatever you want to call it, needs this information, needs help. Go get life insurance, y'all. Get your credit straight. So you can be able to have some financial freedom. So that's what it's all about at the end of the day. Everybody want to have some financial freedom. Start saving your money if at all possible. There's so many ways that you can save your money. And if you contact Curtis, he'll let you know how can you save money as well. So, and that's literally all he does all day, 5, 6, 7 days a week. That's all he does. So Curtis, this is what I like to do at the end of the show. I like my guests to leave us with some kind of positive words, some kind of affirmations or whatever you go by that keeps you going, that can really reach our audience and can like really help them. What would you say? What's that look like for you?
Well, for anybody like with me, know me, I'm definitely one they call a book of motivation, man. Basically, I just want to let everybody know like this, especially when it comes down to things of finance. You are not worse than what the next person is. Everybody has a starting point. Everybody has an end point. But the thing about it is, what's different between the person that reached their end point is that they started. So the number one thing that you need to do in life with anything is to start. Take one step forward and continue to move that next step. Just like a baby. If you fall, encourage yourself to get back up. If you start to cry and you scrape your knee, dust yourself off and try again. But at the end of the day, you need to start in order to reach the finish line. And that's what I have to say right there, man.
Hey, that's profound right there. He almost sound like MLK or somebody on this thing. Hey, he finna go to church on. I had to stop. But listen,
look, I know, right?
y'all, if y'all watch on YouTube, you see he got it blaze on already. So he already ready to give y'all the word for the day. But Curtis, man, I appreciate you so much. It's like, how it is when they go to humming and rocking. Hey, I appreciate you so much. This is Mr. Curtis Jones, financial consultant, with Legacy Builders Financial. And this is Topic Tuesday, Finances and Credit. Each and every Tuesday at 11 a.m. Central Time. Make sure y'all check us out on the Myra J Show. I'm on YouTube, Spotify, and Apple Podcasts. Thank y'all so much. Curtis, thank you so much, man. We will see y'all next time.
All right.